A staggering $68 trillion. That's the projected wealth transfer from baby boomers to Gen X and Millennials by 2045. A seismic shift is coming, yet most investors are critically unprepared for its profound implications. Are you positioned to capture your share of this unprecedented redistribution? Or will cognitive blind spots leave you on the sidelines watching immense wealth flow past, untouched and uncaptured? Consider the dot-com bubble. Many dismissed early signals, swayed by irrational exuberance. History often rhymes. The cost of inaction now amidst such a monumental shift is exponentially higher. Post-pandemic inflation, driven by supply chain shocks and fiscal stimulus, has eroded purchasing power. Central banks' aggressive rate hikes abruptly reshaped global asset valuations overnight. AI, blockchain, biotech, these aren't just buzzwords. They're disruptive forces creating entirely new industries, rendering old ones obsolete and concentrating wealth in innovative, forward-thinking sectors. Geopolitical tensions and deglobalization trends introduce significant market volatility. Supply chain reshoring and trade wars directly impact corporate earnings and global investment stability, demanding vigilance. Fiscal policies, massive national debts, and regulatory shifts profoundly influence market dynamics. Government spending can ignite unprecedented growth, or conversely stifle crucial innovation and capital flow. The global demographic pyramid is rapidly inverting. Aging populations in developed economies mean fewer workers supporting more retirees, placing immense strain on social safety nets and future productivity. This isn't just a transfer, it's a fundamental recalibration of capital. The $68 trillion figure represents a shift larger than the GDP of entire continents, creating unprecedented liquidity and opportunity. Baby boomers, who accumulated substantial wealth through real estate and equities, are now entering their legacy planning phase. Their strategic choices will dictate significant market direction. Gen X and Millennials, often burdened by student debt, face a unique challenge, managing inherited wealth while navigating a vastly different and complex economic landscape. This transfer isn't just cash, it's diversified assets, real estate, private equity, alternative investments. New paradigms for wealth management are emerging rapidly, demanding adaptation. Sectors catering to an aging population, like healthcare and leisure, and those favored by younger generations, such as ESG tech, will see disproportionate growth and investment. The sheer volume of assets changing hands can introduce significant market volatility. Understanding these generational capital flows is critical for strategic positioning and risk management. We're witnessing a great reshuffling of capital. Those who proactively adopt their investment strategies will capture alpha, and those who don't risk being irrevocably left behind. Beyond macro forces, a silent enemy lurks: cognitive biases. These ingrained mental shortcuts often lead to suboptimal financial decisions, costing investors fortunes and opportunities. Loss aversion, for instance. The pain of losing $100 is psychologically twice as strong as the pleasure of gaining $100, causing investors to hold on to losing positions too long. Confirmation bias makes us seek information that validates existing beliefs, ignoring contradictory evidence. This creates echo chambers of poor judgment, blinding us to true market signals. The fear of missing out drives herd mentality. Everyone bought X stock, so I should too. This often leads to speculative bubbles and subsequent painful crashes. Recency bias, overemphasizing recent events. A few good quarters don't guarantee future performance, leading investors to chase past winners instead of fundamental, undervalued assets. Overconfidence bias makes us believe our financial abilities are greater than they truly are, leading to excessive risk-taking and underestimating potential market pitfalls significantly. To counter these biases, embrace data-driven decision-making. Rely on rigorous analysis, not gut feelings. Quantify risk and reward meticulously, ensuring objectivity in every choice. Diversification is your essential shield. Don't put all your eggs in one basket. Spread capital across asset classes, geographies, and sectors to mitigate specific and systemic risks effectively. Cultivate a long-term perspective. Short-term market noise often distracts from the compounding power of patient strategic investing. Think in decades, not fleeting daily fluctuations. Continuous financial education is non-negotiable. The market relentlessly evolves, and so must your understanding. Stay informed, read widely, and learn from experts in historical precedents. Engage with trusted financial advisors. A third-party perspective can identify your inherent blind spots and help construct a robust, bias-resistant investment plan tailored to your goals. This $68 trillion wealth transfer is not merely an economic event. It's a profound generational opportunity. Equip yourself, challenge your biases, and claim your future in this new financial era. The $68 trillion wealth transfer isn't just a demographic event. It's a seismic shift reshaping investment landscapes. We move beyond theory to actionable frameworks for the astute investor. Asymmetric opportunities offer outsized returns for controlled risk. Identifying them means understanding where capital flows will generate exponential growth, not just incremental gains. Our first framework targets disruptive technologies. These innovations aren't just incremental improvements. They fundamentally alter industries and create entirely new markets. AI and automation are projected to add $15.7 trillion to the global economy by 2030. Focus on companies enabling this, from AI chips to advanced robotics and software platforms. Genomics, personalized medicine, and CRISPR technology promise a healthcare revolution. Invest in firms pioneering gene therapies, advanced diagnostics, or biotech platforms. While nascent, quantum computing holds immense long-term potential for cryptography, drug discovery, and complex problem-solving. Consider venture capital or specialized ETFs. As digitalization accelerates, cybersecurity becomes paramount. The global cybersecurity market is expected to reach $376 billion by 2029, essential for all digital ventures. Fintech innovations, from blockchain to mobile payment systems, are democratizing finance. Look at platforms disrupting traditional banking, especially in emerging markets. Our second framework is sustainable infrastructure. Global commitments to net zero emissions drive massive investment into green energy, resilient systems, and smart urban development. Solar, wind, and battery storage are booming. The IEA projects renewables to account for over 90% of global electricity expansion by 2028, a clear investment trajectory. Urbanization combined with climate change necessitates smart cities. Invest in IoT solutions, efficient public transport, and intelligent waste management systems. Companies are under pressure to decarbonize supply chains. Opportunities exist in electric vehicle fleets, sustainable packaging, and carbon capture technologies. Water scarcity and food security are growing concerns. Precision agriculture, desalination, and water purification technologies offer critical investment avenues. The shift from linear to circular economies drives demand for sustainable materials. Look for innovations in bioplastics, advanced recycling tech, and resource efficiency. Our third framework taps into emerging market dynamics. These regions, often overlooked, offer compounding growth driven by demographics, rapid digitalization, and unique economic factors. Many emerging economies are leapfrogging traditional infrastructure directly to digital. E-commerce, mobile payments, and digital services are exploding, creating new consumer bases. India, with its young, tech-savvy population and robust digital public infrastructure, is poised for significant growth. Look at fintech, SaaS, and renewable energy sectors. The ASEAN bloc offers a diversified manufacturing base and a rapidly growing consumer market. Vietnam, Indonesia, and Thailand are key players for both production and consumption. Africa, rich in resources and with the world's youngest population, represents a frontier market. Focus on renewable energy, fintech, and critical minerals for future growth. Latin America is accelerating its renewable energy transition and digital transformation. Brazil and Mexico lead in fintech and clean energy investments, offering robust opportunities. Diversify across these themes, not just geographies. Allocate capital strategically, balancing established leaders with high-growth disruptors in your portfolio for optimal returns. Rigorous due diligence is crucial. Evaluate management teams, intellectual property, and their ability to innovate and adapt in dynamic, rapidly evolving markets. These opportunities come with volatility. Implement robust risk management strategies, including careful position sizing and understanding inherent market cycles and trends. True asymmetric returns often materialize over the long term. Patience is paramount. Avoid short-term noise and focus on fundamental growth drivers and sustained value creation. Integrating environmental, social, and governance factors, ESG, is no longer optional. It identifies resilient companies aligned with future value creation and societal impact. By applying these frameworks, disruptive technology, sustainable infrastructure, and emerging market dynamics, you position yourself for the next wave of capital reallocation. The future rewards foresight and courage. Embrace these actionable insights to navigate the global capital shift and build enduring, asymmetric wealth in the coming decades. We've deconstructed the $68 trillion wealth transfer and identified asymmetric opportunities. Now, it's time for execution. This chapter provides a tactical roadmap for global investors, ensuring capital preservation and optimized returns in a borderless world. Digital nomad investors face unique challenges and opportunities. Mobility demands a strategic approach to cross-border asset allocation, balancing global exposure with local compliance. Our framework starts with diversifying beyond traditional national boundaries. Strategic geographic diversification means investing in distinct economic blocks. Consider a core portfolio in stable markets like the US and Europe, supplemented by satellite allocations in high-growth emerging economies, such as ASEAN or Latin America. Currency risk management is paramount. If your expenses are primarily in euros, but your assets are USD denominated, exchange rate fluctuations can erode returns. Utilize currency-hedged ETFs or forward contracts to mitigate this exposure. Regulatory arbitrage isn't about evasion, it's about legally optimizing your financial structure by understanding diverse legal frameworks. Identify jurisdictions offering favorable tax treaties, investor protections, and ease of doing business. Consider jurisdictions like Singapore, the UAE, or Portugal for their investor-friendly policies and strategic geographic positions. These regions often provide clear pathways for residency and attractive tax incentives for international investors. Establishing international legal structures like offshore companies or trusts is crucial for asset protection and tax efficiency. For example, an IBC in a jurisdiction like the BVI can streamline global operations and safeguard assets. However, transparency is now the global standard. Compliance with FATCA and CRS is non-negotiable. Ensure all your international holdings are properly declared and reported to avoid severe penalties and maintain financial integrity. Tax residency optimization is another critical layer. Carefully manage your physical presence and the center of vital interests to strategically define your tax obligations. Consult with international tax specialists to navigate these complex rules. Beyond allocation, robust risk management is paramount. Geopolitical shifts like trade wars or regional conflicts can impact global portfolios. Diversify across politically stable blocks and consider tangible assets like physical gold for hedging. Operational risks for digital nomads include reliable access to funds, secure internet, and local banking issues. Maintain multiple bank accounts in different jurisdictions and always use secure VPNs for financial transactions. Digital asset security is paramount in this new frontier. Implement cold storage solutions for cryptocurrencies, utilize multi-factor authentication across all platforms, and regularly audit your digital footprints. Over $3 billion was lost to crypto hacks last year. Regular portfolio rebalancing is essential. Review your asset allocation quarterly or semi-annually, adjusting to market shifts and personal goals. Automated robo-advisors can assist in maintaining your desired risk profile efficiently. Maintain robust emergency liquidity in multiple currencies. Aim for 6 to 12 months of living expenses spread across accessible accounts in different jurisdictions. This safeguards against unforeseen events and currency volatility. Cross-border estate planning is often overlooked but critical. Draft international wills, establish trusts, and assign powers of attorney across relevant jurisdictions. This ensures your legacy is protected and distributed according to your wishes. Here's your essential checklist for the global investor. First, define your tax residency strategy. Second, establish robust international legal entities. These foundational steps pave the way for secure cross-border investing. Third, implement currency hedging for major exposures. Fourth, diversify your assets across multiple stable jurisdictions. Fifth, secure all your digital assets with advanced protocols. These are your next crucial steps. Building your global advisory team is non-negotiable. Engage international tax advisors, cross-border wealth managers, and legal counsel specializing in multi-jurisdictional frameworks. They are your navigators in this complex frontier. The global financial landscape is dynamic. Continuous learning and adaptation are crucial. Stay informed on regulatory changes, emerging market trends, and technological advancements to keep your tactical roadmap current and effective. Our journey began by dissecting the generational wealth transfer, then identifying asymmetric opportunities. Now, with a practical execution framework, you are equipped to navigate this new frontier. From macro shifts to micro tactics, the path is clear. This isn't merely about preserving wealth, it's about actively shaping your financial future in an interconnected world. The power to optimize returns, manage risks, and ensure your financial sovereignty lies within your strategic execution. The frontier of global investing is vast and rewarding, but it demands diligence. Don't simply follow trends. Understand the underlying mechanics. Your strategic framework is your shield and your sword in this evolving landscape. Embrace the new frontier with confidence. Build your robust framework, secure your assets, and navigate the global landscape with precision. Your financial sovereignty awaits. The time to act is now. Wisely.